What's up, everyone? Jeremy Kinney here. Today I'm going to be going over the pros and cons of hodling versus trading cryptos. I'm going to tell you some advantages to both of them and differences, and I'm going to tell you how I basically strategize my investment strategy. And it's a pretty good little tip. I think this is going to be a great piece of advice. So you're going to want to stick around to the end of the video when I tell you how I manage the balance between the two different strategies. So let's begin with defining hodling and trading. Hodling is simple. It's just an acronym. HODL, hold on for dear life. It's because cryptos are just so crazy. They're volatile, and they can go up a lot, they can go down a lot. So instead of panicking and getting emotional and selling when they go down, and there's another acronym, FOMO, fear of missing out. People buy when it's high and sell when it's low. It's the opposite of what you want to do. You want to buy low, sell high. We all know that, but for some reason when we hear about this coin that just keeps on going up and up and up, we feel like we need to buy it, and then we buy it at the high, and it starts going down, and then we don't want to lose money, so to not feel the pain, we sell, and then we lose money. You don't want to do that. So you just want to hodl. Just buy a good coin at a good price and wait. Luckily, because the cryptos are doing so well and they're projected to do so well over the 2018, just buying cryptos and hodling, you can make a lot of money. And it may be the simplest, it's definitely the simplest, but it may be the best strategy, especially for most people, especially for people with little to no investing experience. This is probably the best way to go. Just buy and hold. Trading, on the other hand, is just when you are trading back and forth. When this one goes down, you're buying some of your other ones that went up, and you think this one has more potential to go up, so you buy that. You're selling one coin or token to buy another. Try to maximize your profits by doing lots of different transactions. So, the pros to hodling are it's simple. It could work out to be better in the long run. And let me just explain why. Because what happens a lot of times is, like if you had maybe Bitcoin when it reached $700 or $800, and you made a lot of money, it would seem like that would be a good time to sell and buy one of the other cheaper ones. Maybe it would have been good, maybe not. But the point is Bitcoin, I thought it was in a bubble before it hit 1,000. I didn't know anything about Bitcoin, didn't know anything about cryptos. And as it started getting closer to 1,000, and it started approaching the price of an ounce of gold, I was like, it's a bubble. I would sell, if I would have got in. I was like, I got in, it's too late. So I didn't get in. And now we see, if you would have just hodled, you would have did pretty well. So you might sell something because it went up, thinking that's, you rode the bull run, and sell something for some other coin that maybe is just a bunch of hype. You hear this new coin is all exciting. So you sell your good solid coin for this new coin, and your good solid coin goes up like it has been, and the other coin you got into, maybe you bought high because of you FOMO'd, or maybe it turns out to be not a good coin. I think a lot of the cryptos that are coming out are going to go to the true value of zero. But because there's a craze going on, a lot of these coins are getting so much money thrown at them. So you might be selling a coin, might be trading a good coin for a coin that looks good, but a year from now it won't even exist. So HODLing is for the most part, my strategy is HODLing for those purposes, for those reasons. But I'm going to get into the balance of my strategy of how I handle a combination of both, because you do want to take profits at some point. Before I get there, let me just get a little bit more into trading. So you can trade and you can maximize your profits, because sometimes things do go sideways and you want to catch the momentum. You want to catch the next coin to shoot up, because you can catch them 3, 4, 5, 10 times. They'll go up 5 or 10 times really quick, and you can catch them like that. And if you can ride one wave, then ride the next one, then ride the next one, and just keep moving your money around, you could really make a lot of money. So trading is tempting, but it's a rough ride. You're constantly watching them, and if they go down, if you buy them and they go down, and then the one that you sold goes up, it's a lot more stressful. If you've got a million things going on in your life, you may not need all the extra stress. You may be better off just focusing on what you do. Just spend time with your family, figuring out what you want to do with your life, figuring out what you want to do with the money that you're going to make in the cryptos, and just hodl and sit back and let time take its course and let your cryptos appreciate in value while you do some inner work that might be better. But if you got a lot of time on your hands and you want maximum gains, you might want to trade. But you gotta learn. You gotta be smart. You gotta be smarter than the other people that are trading also. So, so that is the advantage of trading, is that you could potentially make a lot more money. But you're gonna need to spend more time researching and keeping up with the markets, watching for new coins, reading the white papers, stuff like that. Another disadvantage of trading is whenever you do a trade in exchange from one crypto to another, the IRS now officially counts it as a taxable event. So if you just like a stock, if you trade one crypto for another, it's like you sold it, and it gets a little complicated. And not only is it more complicated for tax time, but it's you gotta pay. So like if you end up making an extra 30% on your trade because you did that, but you have to pay taxes on your gains at a 30% rate, it kind of offsets your gains a lot. So there's that. It makes taxes more complicated. It increases your tax burden. Eventually you're going to have to pay tax, but if you pull your money out and you have to pay taxes, that money that you're paying taxes could have stayed in the crypto portfolio. So I actually did a video about 6 ways to legally avoid paying taxes on your cryptos, and I'll link to that in the description below. You should check that out. But so I'm just going to keep on moving on. So those are your options. There's no right or wrong way. You could do a combination of hodling. You could have your core position, like basically, let's say you have $10,000 to invest, right? So you pick some solid coins that you're just going to hodl, and you're going to hold on to for dear life, because 2 or 3 years from now, they're going to be doing very well. So you might want to hodl with $7,000 of your coins, and then use 3,000. I'm just making up numbers here, but then you just have a decent little chunk that you can trade with. So that way, if you lose money trading, or you mess up, or you end up getting fished like I did, a million things could happen. You don't risk losing everything. So you can do a combination of hodling and trading, but you just have to figure out what's right for you. So now I'm going to get into what's right for me, where I fall on the line between the two, and basically how I figured out for myself. So the way I see it, at some point you're going to want to take profits from your cryptos. Otherwise, there's no point in doing it, right? If all you ever have is cryptos, but it never affects you in any way in your life, like you never get a better car or house or clothes or go on that much needed vacation or quit your job, you end up having 20 million in cryptos and you die with them, and that never enhance your standard of living, then the whole thing was a waste. You should be using it as a tool to provide a better standard of living, setting yourself and your future generations up financially, and I think escaping the rat race, getting off the hamster wheel, the treadmill of the trap, the money trap, keeping everyone working the 9 to 5. If you can get off of that with cryptos and then spend your time doing what you were here to do, unless your job is what you're here to do, which in most cases it's not. You can use the cryptos to break free from that enslavement. Anyway, I'm kind of going on a tangent here, but you will want to take out some profits. You never know. I am very confident in the cryptos, but of course anything could happen. It's unprecedented. We don't have any reference point to look back and say this is what happens in this case. So anything could happen at this point. So if you get to the point where you have so much money that you could take some off the top to move forward in life and still have a lot of money in cryptos, I recommend it. So let me get into a little bit more of my strategy of how I plan on deciding when to take profits. All right, I've actually got numbers already in my head. Not just in my head, but already planned out to where when I reach this certain point of my total portfolio, I'm going to start doing this. What I'm going to start doing, what I want to do, I'll just go ahead and lay it out there. I want to get a travel trailer, an SUV, and just travel around and see the country. And then when I'm done seeing the country, I want to see the world. It's something I've always wanted to do. I've traveled more than most people I know, but there's so much more world out there. I want to see it before I get comfortable and stay somewhere else for another 10 years in the same house or the same city, So before I get comfortable and buy my dream home with the cryptos, I think I want to hit the road. And so I've got a certain point, where once I have this much money, I'll have enough money to where I can sell enough cryptos to get the SUV and travel trailer and still have a lot of money in cryptos to where I can live off the, not really the interest, but pretty much, live off the profits from the cryptos. And then blog, do YouTube videos like this, podcast, shoot a documentary. All while I'm on the road, I can be doing this, filming people and shooting this documentary, and actually get time to read and stuff like that, stuff that I want to do. So that's what I'm going to do. So I have a certain number in my head that once I get to that point, I'm going to start researching it and mapping it out and planning it. And then when I reach the next goal, I'm going to start making moves, start pulling money out and doing it. And of course, I'll probably overshoot it. I might not just act the same day I hit that goal. I might hit that goal and then 3 days later, I take action and it's up a significant chunk, so it'll be more than that goal. But the point is I want to take some profits out. So here's a strategy I came up with. This is a good. I think this is a really good piece of advice. And let me know what you think in the comments below. If you think this is a good idea or bad, or if you have a better idea. And so this is going to be my way of rewarding you for watching this far into the video. So here it goes. So let's say if you're on the fence where you want to take profits, but you're like, well, what if they keep on going up? If I pull out 10 grand now and it ends up going up 10 times in value a year from now, it's kind of like I missed out on 100 grand. So that's a legitimate concern. You don't want. That's why we're so hesitant to take out our profits, because we are hodlers. We're holding on for the long term because this has so much room to go up. So a nice little compromise, a nice balance between the two would be to take money out. But in this case, we'll just use 10 grand. Simple numbers. Let's say you take 10 grand out for something that you want to do. Maybe it's down payment on a house, or or something. Maybe you want to go on vacation. Let's just say vacation. You want to go on vacation with the 10 grand. So let's say you pull it out, and then you wait. Give it a couple of days, a week, whatever, 2 weeks. And if the cryptos just keep on going up, and it looks like they're not going to come back down below the price of what they were when you sold them, take your 10 grand and go on vacation, and then boom, obviously don't take it out unless you know you're gonna have, it works for you, 10 grand, you get your vacation, but you still have 100 grand in cryptos, and you're happy with that, so figure out numbers that work with you, to where if you take the money, you go on vacation, and the cryptos just keep going up, you'll have enough to where it won't even matter. But here's the kicker: if it goes down, let's say you pull out 10 grand, and then the crypto, just say you sold the same crypto, doesn't matter which one it is, and then within the next couple of days it goes down 20 or 30%. Well, you could put that 10 grand back in, and now you have 20 or 30% more cryptos than you sold. So you've just drastically improved your position. And then you just wait for it to go up, keep going up until it hits another point, because you bought on the dip. Now you ride it up to the next high, and you reach another point where you're like, okay, I think this is getting ready to go down. This is a good point to sell. So then you pull out your 10 grand, or maybe because you bought more cryptos and you rode the wave a little higher, maybe this time you take out 15 grand. You take out 15 grand, give it another day or two or a week, whatever, 2 weeks, a month, It's a short period of time. A lot can happen in a month, You keep your 10 grand in US dollars, you can keep it in the exchange. Just keep it in an exchange. If it's not too much money for too long, keep it in there, hoping that the price dips, and then shoot, if it dips again, buy the $15,000 worth of cryptos at a discount again and increase your position. So now you've increased your position twice without costing you any money out of your pocket. And again, if you sell 15 grand the second time around and it just keeps going up and up, and you're like, you know what, screw it, let's just go on vacation. At least the first time you did it, you increased your position, and now you're better off. So it's kind of like you're creating an opportunity to gamble and create an opportunity for yourself, and it's a win-win. If it goes down, you buy it back at a discount and you made money. But if it just keeps going up, yeah, you may have missed out on some profits, but you wanted to take some off the top anyway. And you gotta live some too. You've got to do, maybe you're driving a beat up car that you don't know if it's gonna start tomorrow. Maybe you have things that you need. We all have things that we need, and so we're gonna want to take some off. But instead of just taking the profits and going and spending it the same day, why not take the profits and wait for a few days and see if they take a little dip? And you don't have to put all the money in there. Let's just say you take out 10 grand and they go down in value 30%. So now you can basically buy the same amount. Let's say you have some debt. You're like, I have 10 grand of debt I want to knock out. Which, by the way, if you've got 8% debt or 5%, or even 10%, they're charging you 10% interest on your debt, and you're wanting to knock out the debt with cryptos. As long as the cryptos go up more than 10% in a year, which they should, then what you're gaining from the cryptos will outweigh the interest that you're paying on your debt. But let's just say you wanted to pay some debt, and you have $10,000. You took you sold $10,000 of your cryptos. If they go down 30% in value, now you can buy the same amount of cryptos back for $7,000. So you could take 7 of your 10,000, buy the same amount of cryptos back, and you have 3,000 profit just sitting there. You just created it. So then you can take your 3,000 and knock off your debt, or maybe that's enough for you to go on your vacation or whatever. So I hope that's a really good idea for you. I hope I'm getting your wheels spinning. I've got one more tip for you, but before I give you this last option, I want to remind you to like this video, because I think that's a pretty good tip. I think that's worth a like. If you agree, hit that like button. And you know, if you're a new subscriber, or if you're a new viewer, become a new subscriber. You know, it's awesome watching every time, you know, every day when I see someone new and subscribed, I get excited. I look at the name, I see you, I look at the comments. I still have less than 1,000 subscribers right now, so I'm answering questions in the comments. I'm interacting with everyone, and I'm still small enough where I can do that. And I've got lots to give, not just with cryptos. I'm not even an expert on cryptos. I'm new to this. You know, I'm just teaching people what I'm learning along the way, because this is so crucial and it's so urgent, so time sensitive. I really got into this to share other information, and I landed here. And I just figured, hey, if I'm going to I'm literally spending all my time researching and learning about cryptos, whereas before it was everything else. I mean, I've spent my whole life. That's what I do full time, is I research, I learn, I search for the truth. And I took time off the other subjects so that way I can focus on cryptos. So I might as well teach you what I'm learning along the way. So, alright, so let me get into one last little tidbit, and this is going to be a really good piece of advice for you. I mean, especially if you haven't watched my videos before, this was probably going to be new information. Another option that's like the best of both worlds is to get a loan with your cryptos as collateral. So what that means is, like, if you've got $100,000 worth of cryptos, you can take out a $50,000 loan with your $100,000 being collateral. So you get $50,000 US dollars or whatever, and you know, you don't need a credit check, you don't need any other collateral. It's just off your cryptos. The beautiful thing is two big things really. One, it's not a taxable event. You're just getting a loan, because you're not technically selling your cryptos. You're just getting a loan using your cryptos as collateral. And so that's good. So you're able to take profits without paying taxes. Beautiful. And the other good thing is you don't have to give up your cryptos. If your cryptos keep going up in value, then, you know, your investment, you still get the appreciation. So basically, just like I said with the credit cards, with debt, as long as your cryptos are appreciating in value at a higher rate than the interest that you're paying, which they should, especially for the next few years, then you're moving forward, you know. And right now, okay, so what you can do, there's a new company that's out that just launched called Salt Lending, S-A-L-T. I did a video on them showing me buying salt at $2.50 just a few months ago. It's around $15 right now, so it's went up 6 times. It's pretty good, but the retail value of these salt tokens is $27.50. So if you can get them for $15, that's like buying a $20 bill for, you know, $12 or whatever, you know. So you know, you do that all day, every day. So it's a really good deal right now, and eventually, you know, especially if you get a lot of cryptos, you're probably going to want to get some of your profits, and this is a good way to take profits without actually having to sell your asset, the cryptos, and you don't have to pay taxes on it. So check out Salt Lending. I'll try to remember to link to that in the description below, along with how to avoid paying taxes, where I also mentioned salt. It's a really good deal right now. I think it's a good buy to buy the tokens, and I think it's an excellent idea, and a lot of people are going to have a lot of money in cryptos that are going to want to get their profits without having to sell their cryptos. It's a brilliant idea. So it's really promising. It's a really promising crypto. So there's another option for you guys. So I hope that this gives you a little bit of ideas, to get your wheels turning in your head for a long-term strategy of how to know when to sell. Just like I said, use my tip. Come to a point when you're on that fence. You're like, I would like to sell some and make this move. Well, pull it out. If it goes down, buy more. If it goes up, just make the move that you wanted to make. It's a win-win. Whereas if you just do it one way or the other, you could lose. So yeah, again, subscribe to my channel if you haven't already, and if you are subscribed, make sure to hit that bell so that way you get notifications. Some of these things are going to be very time sensitive. If I find a good coin that I recommend, then I'm going to do a video about it real quick, and you're going to want to be the first to see it so that way you can go and get it before this thing goes to the moon. So with that said, let's make this money with the cryptos and make our lives and the world a better place for all of us.